Hey everyone, it's the first week of September 2022. My name's Matthew. This is Bald Prairie Real Estate. Let's talk about what's been going on this past week in the Canadian real estate news. First off, the government of Canada launches a program spending billions of dollars to build about 17,000 homes in Canada. TD Bank has revised its forecast for the Canadian real estate market down again. We'll talk about that. And in Toronto, nearly 50% of rental properties are seeing bidding wars. That's right, bidding wars for rental properties. Nearly 50% of them are going for more than what the landlord asked for that monthly rent. Let's get into this week's news right now. The first topic I want to talk about here is the government of Canada is going to spend $2 billion to build 17,500 homes in Canada. You know me, I'm always excited to see when there's somebody talking about building more homes in Canada. We badly need more homes. Now we need millions of homes to be built, not just 17 or 20,000 homes to be built. But of course, something is better than nothing. Now this has kind of been aimed or talked about as a rent to own program that they're going to start here. That's awesome if we can find a way to get younger buyers, especially into the market, or lower income buyers into the market even easier. So again, I'm always in favor of building more homes and finding creative solutions to get buyers into the market. But when you do the math on this, that means they're going to spend about $115,000 per home. Well, there really isn't much that you can build for $115,000. I don't know if you could build much of a studio apartment for that. So I'm not sure if this is planning to fund the entire construction with this money, or if this is going to be loans and grants to spur on the private sector to do this. This to me feels more like, hey, look, we're doing something to fix the housing crisis, without actually really doing much and spending much money. But we'll have to see. I'll keep you updated as more details of this become available. Now let's talk trigger rates. This is the buzzword in Canadian real estate right now. This is when you have a static variable rate mortgage. That means when the variable rate goes up, that is the Bank of Canada changes their rate, the percentage of your payment that goes from interest and principal, well, the interest payment will go up, the principal payment will come down. So let's just say you have a $1,000 payment, $500 is principal, $500 is interest. When the Bank of Canada raises its rate, that is going to go up, say $600 in interest, $400 in principal. This of course means your amortization is going to get longer, or when you go to renew, they have to correct that amortization because it can typically not exceed 25 years. Some cases you get to 30, but if it exceeds that, they have to rejig your payments, meaning you're going to see a lot of payment shock. But the trigger rate that everybody is talking about right now, that is when that payment becomes a certain percentage of all interest, typically about 80 or 90%. Some lenders are 100%. So once that payment is now over $800 a month in interest only, then they're going to have to bump up your payment so that it comes back down below that threshold. RBC, for example, says they've got about 80,000 mortgages that could be impacted by trigger rates, but they are saying that the average customer will see their monthly payment go up by about $200 a month. So everybody's talking that this is going to be such a big deal. Remember a few years ago we were talking about the deferral cliff and how much of a big deal that was going to be? This is going to be very much the same. There's absolutely going to be some people that are going to be impacted by this, but for the most part, the vast majority of consumers are going to see their payment go up a few $100s a month. It's not like all of a sudden everybody's going to go, oh, I can't afford my house, I got to sell it and fire sale them all. Next article I want to talk about here, this was from the Financial Post, talking about the history of rate changes. When rates gone up, well, they typically also come down, and the time frame when we see interest rates go up and down is generally only a couple of years. So while we're seeing interest rates go up quite a bit, and right now we're really only at what would have been considered just a few years ago very low interest rates, if history repeats itself, which I'm not saying it will, but you can see in the Financial Post article, I'm going to link this below, how interest rates have gone up, they've come back down, and this higher interest rate environment or rising interest rate cycle that we're in right now typically only lasts for a couple of years before rates start to trend back down. So it's very curious to see here if we follow historical patterns and see interest rates come up and then start to taper back off within a couple of years, or are we in a different cycle now where we see continually rising interest rates, or maybe they just flatten off? It's going to be really interesting to see what happens here with that. But check out this Financial Post article, kind of see the timeline and how things have gone up and down over time. This next article comes from the Toronto Realty blog, which if you're from the Toronto area, absolutely check it out. It's a great one. I'll put the link to this article specifically in the description. They're tracking here the number of properties in Toronto renting over asking price. Remember, rents in Toronto have gone up like 25% in the last year alone, but their numbers show that nearly 50% of properties in Toronto are renting for more than asking price. The fact that places are renting more than asking price, that doesn't surprise me. The fact that it's nearly 50% blew me away. And this is again due to that acute shortage of homes in Canada. Before we're talking about the shortage of homes for buyers, well, as that buyer market has slowed down and the rental market has picked back up, we've just seen that shortage shift from one kind of market to the other. This is where we need to see more homes in Canada built, because if we don't, this problem is just going to oscillate back and forth or potentially impact both at the same time. Until we see more homes, you're going to see crazy stats like this. People competing over houses to buy and paying more asking, or renters competing over properties and paying more than the rent was being asked for from the landlord. This is absolutely crazy and won't be solved until we see more homes built in Canada. The last article I'm going to talk about here is TD changing its forecast, or should I say revising its forecast for the Canadian real estate market. I talked last week how TD was projecting about a 19% decline from peak to trough. They've changed that now to about a 25% decline from peak to trough. They've extended that timeline to a little bit into the spring of next year. But this really underpins what I said last week, and that is nobody has any clue what is going to happen right now. Anybody who's telling you this is for sure going to happen, they're absolutely lying to you. Everybody's just making educated guesses at this point. We are seeing a decline. We're probably going to continue to see a decline. That's the trend that we're seeing. Where the bottom is, when we start coming back up again, because prices will come back up at some point here, that is anybody's guess right now. But if you want to read this article, I'll put that in the link description below as well. That's a wrap for this week, guys. If you see an interesting article in the news that you want me to cover and explain in greater detail, email it to me. I'll put my contact information below so you can get a hold of me. If you just post in the comments, almost always YouTube blocks the comments, and most of the time I don't even know that they've been posted. They just get lost in some weird YouTube spam filter. So send me an email and I'll be happy to talk about that in next week's episode. As always, guys, thanks very much for watching.